I am Peggy van der Pluijs. Thank you for being here. So today I want to speak about Canada. Yes, again, the Trump administration is really getting my creative juices flowing, but not just Canada, obviously. Canada in the context of their pension fund. And I believe it's really time for Canada to leverage its own investment power. And it is the 2.5 trillion question. Why aren't we investing in ourselves? So for 15 years, I've been asking the same question. Why don't Canada's pension funds have a mandate to support provincial and national economic growth? Seem logical. You want to allocate capital, you want to have return on these investments, but at the same time, you want to have some economic development in your country and in your provinces. So for 15 years, when I've been asking this question, which I think is a logical question, I've been given the same answer. It is not in the mandate. And to which my answer has always been, well, why don't we change the mandate? I know it seems very obvious, but nothing changes. So and meanwhile, right now, our largest trading partner, the US, is increasingly turning from an ally to a strategic threat. I mean, from the tariffs to buy American policies and now even expansionist rhetoric. It signals really a future where Canada's economic independence is at risk. So again, it is important for us to ask ourselves this question because while the US is doubling down on economic nationalism, we, Canada, are not even using the tools at our disposal to strengthen our own economy. And I was speaking last week about, decreasing the barriers to trade internally within Canada, which seems obvious. And now, okay, how can we use our big pension fund in order to actually support our economic power? And actually, this is one of the reasons I just applied for the role of Chief Investment Officer at the Ontario Pension Board because I really, really want to move the needle on that because if we want to change, we need the people in leadership who will push for policies that prioritize both strong returns and economic resilience. And every time I have this conversation, people, kind of say, wow, you cannot really have strong returns and economic resilience. Everyone is doing it. CDPQ in Quebec is doing it, but somehow it's impossible to do it in other provinces and at the level of the country. For me, it is such a wasted opportunity. So, for context, Canada's pension funds control 2.5 trillions in assets, and that is more than Canada's entire GDP. The GDP of Canada in 2023 was 2.4 trillion. Very close, I admit it. So these funds are some of the most sophisticated investors in the world. They are backing infrastructure, real estate, private equity across Europe, Asia, and the US. Yet most of them, they don't have a mandate to prioritize investments that benefit Canada. Again, seems like insanity to me. So there is one exception, I just mentioned it, which is CDPQ, Caisse de dépôt et placement du Québec. And CDPQ actively invests in Quebec businesses and infrastructure. And they still deliver very strong return. So if they can do it, what can other funds? I can tell you the number of times I spoke about that. I wrote about that. I'm losing literally my mind on that. And it's like talking to myself, literally. So one of the questions I want to ask is, why do our pension funds build highways in Texas, but not in Ontario, which is slightly congested as well? Why do we back private equity in Europe, but underfund manufacturing in Canada? Why do we finance energy projects abroad, but we hesitate to support our own industries. And I mean, the answer, it is not the mandate. Okay, well, I think it's time for that to change. And I understand, I mean, it's way more sexier to have an office in Singapore, an office in Paris or London, an office in San Francisco, invest in international companies, travel the world. You know, it's nice. You go to France to you know, book a couple of meetings, and then you go on vacation for 3 weeks with your spouse with the flight tickets already paid. I totally understand that. But I mean, as a taxpayer, I'm not super keen on that. I really don't think it makes any sense as a country. So, you know, let's cut all these satellite offices, especially that, let's be honest, if there is a crazy investments happening in any of these geographies, why would they put first a Canadian pension funds in their cap table? Let's ask ourselves that. So anyway, so let's talk again about economic resilience. Some of you might know these numbers already. So Canada's economic dependence on the US is staggering. 63% of our trade is with the US. 63. 3.6 billion in goods and dollar, obviously. $3.6 billion in goods and services cross the border daily. The US is our largest investors, but also our biggest competitor. So the risks again of this dependence have never been clearer. And I mean, I am personally very thankful to the Trump administration, regardless of my own political views, because it really pushes us out of the complacency. Again, I talk about internal trade barriers, I'm talking about pension fund, all these things that I have no freaking idea why it has not been solved. Now suddenly everyone is talking about internal trade barriers. Really? We needed that to get going? I mean, like, it seems insane to me. So anyway, the US is prioritizing its own industries. It is tightening trade restrictions. It is making harder for Canadian businesses to compete. So if we don't act now to mobilize our investments and our purchasing power, we risk becoming even more vulnerable. So I think we absolutely need a new mandate for Canada's pension funds at the provincial and at the national level. Pension funds are meant to maximize returns for beneficiaries, but long-term sustainable returns depend on a strong, independent Canadian economy. I don't think that the Canadian pensioners will have a lot of success if the economy of Canada is in the shitter. I'm very happy that maybe pension funds have invested in, again, an highway in Texas or whatever in France, but that's not really going to serve the country by itself. So it's really time to update the investment mandates, to prioritize Canadian infrastructure. God knows we know that. On top of that, innovation and industries. Again, just like CDPQ does for Quebec. We want also to have support for national and provincial economies, for their economic resilience. So key sector like manufacturing, energy, technology, and we need to ensure that our capital is working for us, not just for foreign economies. And I mean, if you listen to what's happening at in the US, well, a sovereign wealth fund, a US sovereign wealth fund, was one of the first announcements that was made by the Trump administration. They understood very well the power of their own investment power. Why aren't we doing that? No freaking idea. So again, it is not about protectionism. It is about economic survival. The US is playing the long game. Canada needs to start doing the same. So the final questions and the final thought that I guess we need to answer is that if CDPQ can invest in Quebec, smaller footprint, obviously, while still delivering competitive returns, why can't the rest of Canada's pension funds do the same for their provinces and the country? And again, of course, CDPQ does not just invest in Quebec. That's not what I'm saying, but they do have a mandate of economic development. So they are looking at investment in priority in Quebec. Well, we can do exactly the same with CPPIB, with OMERS, with all the funds we have that are actually not looking at economic development in parallel with economic return. So I would say the mandate excuse no longer holds. The real question really is, do we have the political will to change this mandate? And, I will let you come to your own conclusion. And as we're seeing a lot of elections happening in Canada at the provincial and national level, I really, really, really hope that we're going to finally see some support from political entities to actually support Canada's economic resilience, which seems quite obvious to me once again. Have a wonderful day. Thank you so, so much for watching. If you want to chat with me about that, reach out to me. It's easy to find me on LinkedIn, on my website, everywhere. And again, really, really looking forward to hearing your comment. Thank you. Bye-bye. Take care.